You're listening to the Option Alpha podcast from OptionAlpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at OptionAlpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again at OptionAlpha.com, working every single week to make this the most popular investing podcast offered in iTunes and online because it's based on one thing and one thing only, and that's helping you make smarter trades. So again, thanks so much for tuning in today. We've got a very cool episode talking about IRA accounts and how you can do a better job trading options in them. Specifically, we're going to go through our top 7 tips about how you can trade options in your IRA account, things to do, things to avoid. I think you'll really enjoy it. I think it'll be really actionable and a little bit different than some of the other episodes that we've been doing. Also, I wanted to let you know that we've also added something new, which I have been actually wanting to do for a little while now, but just never got around to doing it. But it's a way to ask me questions that I'm going to start answering live on air. And it's just another way to get connected with you guys. We've done so through our forum this year, and that's been a huge success. Our Pro and Elite only forum has been really, really powerful. But now I want to literally hear from you. So when I say hear from you, I want to hear your voice. I want to hear you guys. And so we've added the ability to do that through our website. So if you want to ask me a question or something else or whatever, have a testimonial you want to share with anyone, then go on over to optionalpha.com/ask. That's just optionalpha.com/ask. You hit the button in the middle of the screen. It's the record button, and then you can record, I think it's up to 5 minutes of audio to ask a question. Now, obviously, keep it short. Tell everyone who you are, where you're from, maybe how long you've been trading, and then get into your question. And what we're going to start doing on all of the shows in the future is start playing some of these recordings towards the end of the show and answering some questions. And this is going to be a great way to find out what you're having trouble with, what you have a challenge with, maybe if it's a specific trade or an account question or a general philosophy question, whatever it is, it doesn't really matter. But ask us your questions. I'd love to hear from you. And of course, you might be featured on the show when we play it live on air. So again, optionalpha.com/ask. In today's show, like I said, we're going to go through our top 7 tips, and let's get started here with tip number 1 for trading options in an IRA account. And that is to leverage these IRA accounts as much as humanly possible. I mean, remember, these are tax deferred for capital gains and dividends. And it doesn't matter if you have a traditional IRA or a Roth or a SEP or whatever the case is, you need to be leveraging these accounts as much as possible. Now, the only caveat to that is that you do have to trade a little bit different, which we'll talk about here towards the end of the show. But it's going to be hard to leverage it as much as possible because they do have restrictions on how much you can put into your IRA account. And then there's restrictions on top of that for how much money you can make before you put money into your IRA account. So my suggestion would be to try to put as much money into these as possible every single year, because it's not like you can just go out and fund these things with $200,000 into your account and it all qualifies for tax purposes. You're going to have to, fund it at chunks and intervals throughout your life. And if you have a big IRA account, you're ahead of the game and you have the ability to, trade as much as possible in these. And I think the benefits in trading in an IRA kind of overshadow some of the drawbacks of, some of the strategy restrictions and having to create risk-defined trades. I don't think that having an IRA account is a bad thing. I think it's actually a good thing if you can do it. For my personal trading, we do have a margin account, and then I've got 2 IRAs. I've got a Roth IRA that I try to continue to fund. I phased out of that restriction many years ago to be able to fund that. And so now I try to put a lot of money into our SEP IRA account, which comes off of the Option Alpha business. And, kind of that end of the thing, because we have Option Alpha registered as an LLC and then it's classified as an S Corp. So we have that and we try to put as much money in there and, kind of trade that account as well in kind of parallel with the trading that I do on the margin account to this. So I do the same types of trades and then I'll just convert them over just a little bit in the IRA account to the risk-defined counterpart. So tip number 2 here is you have to be aware of your specific broker restrictions. This is actually really crazy because I started going out and I started looking for the different, restrictions on IRA accounts. And the only thing that I really, really found is that there's pretty much only one universal rule as it relates to IRAs, and that's that you can't borrow or trade on margin in your IRA account. And so that prevents a lot of the short selling, again, the use of margin, naked puts and calls, all of that stuff. You can do them on a cash secured basis in some cases. So some brokers will allow you to do naked puts, but as long as they're cash secured. Some brokers will allow you to do obviously covered calls, which is secured. The short naked call is secured by the underlying stock, but you need to check with your broker for specific restrictions, because actually what I found in going out there is that some brokers do have pretty hard restrictions on what you can or can't trade in an IRA account. So for example, right now, the time that we did this video, E-Trade and Options Express do not allow you to trade futures in your IRA account. Fidelity doesn't support futures either. Interactive Brokers and TD Ameritrade, kind of it's the main TD Ameritrade house, they have limited ability to trade futures and options. Options Express does not allow calendar spreads on cash settled indexes. Schwab does not allow any options spreads at all, which I think is crazy. So if you're with Schwab, you need to run as fast as you can to a different broker. And of course, they don't support futures because they don't support option spreads. And then you have something like Thinkorswim, which is pretty open, but has some different approval levels and level processes that you have to go through to get approval to trade different strategies. So the end result here is that you've got to understand exactly what your broker is doing. Now, great show, if you're interested in options trading approval levels, if you haven't learned about it, is check out show number 48 of the podcast, where we went through the main 4 different levels and how to kind of work your way up these levels with each broker. It was a really cool, popular episode and would really help out here. So tip number 3, use a little more capital with your IRA accounts. Now, this is one that I have an asterisk on because I don't want people to assume the wrong thing, because what I publicly say all the time in most of our training is that you should allocate up to 50 to 60% of your account in trading, if you can, if there's enough trades, right? We don't want to force trades, but if you can, 50 to 60% of your equity, and leave 40 to 50% in cash. Now, when you trade in an IRA account, everything has to be risk defined or cash secured. So what does this mean? This means that you can go above that limit if you want to, and that will help compensate for the fact that you can't do strategies that are naked. So for example, if you were to trade a naked strangle or straddle in a margin account, you'd probably take in a higher premium to do that, but you'd have to hold more of your money in cash, right? Or in margin to cover that trade. So maybe you take in $500 of premium, but it costs you $2,000 of margin. Well, in an IRA account, you could turn or convert that strangle or straddle into an iron butterfly or iron condor, make it risk defined, and then what you'd be able to do is maybe trade a little bit more contracts. So maybe you only take in $200 of premium. So you trade, 3 contracts and take in $600 of premium. And each contract maybe, controls, or requires $700 of premium or whatever the case is. So you can see how you can do a little bit more in your IRA account to compensate for the fact that you have to create these risk-defined, cash-secured type positions. So I think you can go a little bit higher than that. I don't want to necessarily set a threshold, but I would always try to have a good chunk of change available in case the market goes crazy and margin expands. So 25, 30% of your account kind of held in cash at all times, I think is a good starting point for where you should be. But again, I think you can trade a little bit higher cash levels or can trade a little bit more of your account with an IRA account. Tip number 4 is trade inverse ETFs when you can't short stock. So one of the major restrictions in an IRA account is that you can't short sell stock, but that doesn't mean that you can't buy anything else. And so there are a lot of inverse ETFs that are out there that are double or ultra short, other securities. So like one example of that is the TBT, which is an inverse bond ETF. And so when bond prices go down, TBT prices go up. So you can have short exposure through these inverse ETFs. The only thing that you want to be careful of is just you understand how they work and how they're priced, because there is a little bit of a negative drag that happens with these inverse ETFs. Again, a great show that you can go back and reference is show number 27. We talked all about this negative drag that impacts inverse ETFs and walk through a bunch of different examples so that you know exactly how they work and so that you can trade them appropriately. Tip number 5 here is that you can sell naked options as long as they're cash secured. So we talked about this earlier. You can do naked put options and you can do naked calls as long as they're secured by something, whether that's cash or underlying stock and equity. So in the case of a covered call, it's very simple. We talked about this in show 53 about how you can beat the market just doing covered calls, and you can do those in your IRA account. You sell a naked call, but it's secured by the underlying shares that you own. You can also do a naked put option without any shares at all, as long as you're securing that put option in cash. So what does that mean? It means that if you sell a naked put option for a stock at a $15 strike, that assumes that you're going to be able to buy that stock 100 shares at $15. So you've got to have $1,500 in cash to secure that position. Okay, so that's really what it means. So obviously the higher priced stocks require a little bit more cash because you got to secure that entire thing. Tip number 6 is open up multiple IRAs. Open up an IRA for your spouse, open up a business IRA or a SEP IRA, open up a IRA for your kids, and get options trading approval levels for all of those. So this is actually one of the things that we did here. I opened up IRAs for my wife. We have an IRA custodial account for my kids, and I try to trade options in those. Look, people, we know that options trading works. Again, go back to show 53 where we talked about how just a simple option strategy beats the market using a covered call. We know that this stuff works, so why not leverage the ability to trade in multiple accounts and have them all under one roof? Could it make it more complicated because you got to log into a different account 1 time or 2 times a month just to do a simple covered call strategy? Sure, it's going to be a little bit more complicated, but the benefits of doing so completely outweigh anything else that you can do. So that's tip number 6. Open up multiple IRAs. Try to control them for your family if you have the permission from your spouse, right? Talk with your spouse about this. I don't know if you have to talk with your kids about it necessarily, but just understand that you're controlling their money and managing their money for the future. And tip number 7 here is convert all strategies into their risk-defined counterpart. Probably it really should have been tip number 1, but it's tip number 7 because I think it's really the most important, or kind of the one I wanted to end with here. And that's that everything that you can do in a margin account, you can do as a risk-defined counterpart in an IRA account. So you can take a strangle and convert it into an iron condor. You can take a straddle and convert it into an iron butterfly. You can take a short naked call or short naked put and convert it into a credit spread. You can always convert these strategies into their risk-defined counterparts so that they are allowed to be traded in most IRA accounts. Now, one of the things that we do here at Option Alpha is, as part of our Pro and Elite membership, you obviously get our trading alerts and all portfolio access and things like that. And what we do is when we send out a trade, if we do a strangle or straddle, we will always put in the comments what the risk-defined counterpart is if you're trading in an IRA account. So we know that most of our members, not say most of them, I think right now it's about like 44% of members are trading in an IRA, and we get that and respect that. We do not do most of our trading in our IRA just because we do it in our margin account and have that ability. But we respect that, and we send out a trade alert that also says, hey, if you're trading in an IRA, you need to also buy this option and this option to create an iron condor or to create an iron butterfly or whatever the case is, so that you know exactly what we're doing on our account and what you can do in your account. But the reality is here is that you can convert every single option strategy, if it's undefined risk, naked in any way, shape, or form, into a risk-defined counterpart. So there's no excuse of not being able to do some of these really high probability, high profit strategies. Again, then you can scale up. If you can't do one strangle that takes in $500, do 2 iron condors that take in $250, and you're at the same place. So use a little bit of logic and knowledge and smarts here to just convert some of this stuff over and think through the process a little bit slowly. Once you get it, I think you'll realize that the ability to trade in your IRA is actually really, really great, and it gives you a lot of leverage in the future to grow your account.
Now, the closing bell. Find out which stocks we're looking at right now, trades we're making, and hear our game plan moving forward.
All right, so in the closing bell segment here today, I want to go through a new possible trade that we're going to try to get into here towards the end of the day, and that's in IBM. And IBM actually has earnings that are coming up today after the close. So I'm recording this video on July 18th, and IBM has earnings coming up after the close. Stock right now is trading just a couple pennies shy of 160, so it's trading right at about 160 right now. Implied volatility is in the 55th percentile in rank. So it's high. It's high implied volatility. It's not insanely high as it has been before in the past, but it gives us an opportunity to maybe make a trade here and, take some money off the table if we see IBM move inside of the expected range. So when I look back historically here, and you can just pull up a chart anytime, when I look back historically here with IBM, it is a bit of a mover for earnings. And so we recognize that, but I think a lot of that has been priced into the fact that options or the market's kind of pricing in a pretty decent move here in IBM for its earnings. Now, of course, we are going to go into our trade tab and check out the market maker move or the expected move. Now, if you have our earnings calendar software, that's already priced in there. You can check it on your broker platform. Thinkorswim has it in there really easy. If you don't have a broker that does this for you, again, our earnings calendar software takes care of this for you and lets you know what that expected move is. So we're going to go in there and we can see right now that the expected move in IBM is about $7, about $7.14, so a little over $7. So what we're going to do is we're going to assume that the stock moves at least $7 for the purposes of building our trade. Is we want to make a strategy that is neutral from where the stock is right now, but that gives the stock a $14 range, $7 up and $7 down or more. And if we do that, then we've got about a 68% chance of success on this trade, or about a 70% probability of winning on this earnings trade. Now remember, these earnings trades are just one-day events. We're only going to trade it today and then hopefully get out of it tomorrow after the stock opens and kind of goes through the earnings cycle and all that stuff happens. It's repriced based on earnings. So we're not looking to hold this thing really, really long. And for that reason, we always choose the frontmost options that are available. If that's weeklies, we choose the weeklies. If it happens to be the monthly contract, because where we are in the cycle, we choose the monthlies. In this case for IBM, that is the weekly contracts that expire in 4 days from now because today is Monday. And so we're going to trade those weekly contracts, which also happen to be the most liquid right now. There's lots and lots of activity and open interest here for IBM, naturally, because it's a big company. Some of the at-the-money strikes are 6,000, 7,000 contracts a piece. So lots of liquidity. I don't think it's going to be hard to get into or out of this contract at all. So again, stock's trading at 160. We're going to go at least $7 out on either end and start building strategies out there. Now, when I actually go into our pricing screen, I actually want to go a little bit further than that $7 range. I want to give myself a little bit more room to be right in this trade. So I'm going to go down to 150 puts. We're going to sell the 150, 145 put spread. And that's going to be a risk defined position. And of course, we're doing it risk defined because naturally this podcast was about IRAs and trading in an IRA. And then we're going to go up to the 170 and sell the 170 calls and buy the 175 calls. So we're doing a $5 wide credit spread on either side. Again, we're selling the 170 call, buying the 175 call, selling the 150 put, and buying the 145 put. $5 wide spread on either end, and we are beyond the expected move because, again, stock's trading at 160, has about a $7 range, and our short strikes, the 170 call and the 150 put, are both beyond that move. Okay. Now, in this case, because we're doing that risk defined, we're taking in a little bit less of a credit than we would if we did this as a naked straddle or strangle. But since this is usually a big mover, we don't want to take on too much risk here. Stock is a big stock, so it's going to create a lot of margin if we wanted to hold this position in margin. And I would rather do a couple iron condors than to do one big naked strangle on this particular earnings trade. Again, because the stock tends to be a big mover after earnings, we don't want to put ourselves in a position where we have too much one directional risk for the stock due to breakout. So in this case, with these iron condors, we right now are collecting about $90 per iron condor. Now, that's a little bit less than what I would like to collect. I'd like to collect about $95, $100, but still $90 for over a 70% chance of success is not bad at all. We probably have somewhere around a 74, 75% chance of success here. So again, the premium isn't amazing. It's not something I'm going to do, 25 contracts in, but we'll definitely scale up here and do a little bit more contracts and get into it. Again, the risk here in this trade is obviously if the stock goes beyond those break-even points, which for us is right about 171 and 149. So if the stock makes a move That's about 1.5 times the expected move. Then we will potentially lose some money on this trade. So I like the trade. We're going to get into it with a couple contracts here and then also send it out to our members as far as an earnings trade. And we're going to try to get filled here a little bit higher price, kind of reach for it here and see what we can get.
Thanks for listening to the Option Alpha podcast. If you liked what you heard, please drop by iTunes and leave a rating or comment. Plus, you can get everything: free email updates for future shows, transcripts, video tutorials, case studies, and more. Just visit our website at optionalpha.com.
All right, so I truly hope you enjoyed today's show and got at least one thing out of it that you can apply right now to make you a smarter, more profitable trader and investor. If you have somebody that you know, or a friend or family member or a coworker that trades in an IRA and you'd like to share this episode with them because you think it might be helpful, please send it over to them. Help spread the word about what we're trying to do here at Option Alpha. And of course, you can always get additional resources and links mentioned in the show, plus some additional related video training on IRAs, and in addition to broker-specific trading levels and different types of strategies and creating risk-defined counterparts in strategies, so converting strangles and straddles to iron condors and iron butterflies. You can get all of that by heading over to the show notes page at optionalpha.com/show56. That's just the number 56, optionalpha.com/show56. And hey, one last thing. If you have a minute and could head on over to iTunes and give us a rating or a review, it would honestly be the best way to get the show into the hands of those who need it most, and I would be extremely grateful. Finally, you can get our freebie today. It's our Ultimate Strategy Guide, completely expanded. We went back about a month ago now and expanded our strategy guide out to 90 pages. It has detailed one-page worksheets for each and every strategy that we trade, which goes through exactly how to get into the trade, how to select the strike prices, which contract months you should trade, when to get out, when to manage the trade, stop losses, profit targets, the whole deal. It's all there for you for free. So you just have to go to optionalpha.com/ebook. Again, that's optionalpha.com/ebook to download our Ultimate Strategy Guide. Until next time, happy trading.